All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And as always, we're so happy and grateful for all of you joining us this evening as we take a look at the technicals and the fundamentals as they relate to the Forex market to see what we might be able to take advantage of. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we continue to do an amazing job of participating and engaging. So if everybody can hear me loud and clear, drop me a 1 in the chat. So I know we are all set and ready to get this session going for tonight. Thank you very much. I appreciate it. All right, hold on. We just had a few more people join us. Welcome, welcome. Make sure that you have control over your microphones. Just a friendly reminder, hey, if you're not asking a question or making a comment, please keep your microphone muted. All right, so with that being said, let's hop right into it. And let me get this closed out and let's jump over to the Forex calendar. And hey, we look at the ADP non-farm payroll, non-farm employment change, and we can see that it came in above forecast, 208,000 on a projected 200,000 jobs added. So when you look at private sector jobs, it came out above forecast. Okay. We go to the ISM manufacturing data, came in at 56.7, so above forecast. So all of this data, right, continues to support the Fed's narrative to hike rates. As a matter of fact, the Fed came out today, right, and pretty much said, "Hey, we don't expect to pivot." Okay, so just like we were talking yesterday, hey, we got the relief rally in the stock market because investors are hoping, based on some of the data that came out, that it may cause the Fed to pivot a bit here in the future. And with this new data, not looking like they're going to pivot at all. And we were pretty much talking about that yesterday. So that's where we are. So for our newbies who do not know what the ISM service PMI is, you can always click and read all about it. So actual greater than forecast is good for the currency. It's released monthly on the third business day of the month. Ends November 3rd. Above 50 indicates industry expansion. Below indicates contraction. Source change series from unadjusted seasonally adjusted as of January 2001. Okay, source change series calculation formula as of February 2008. That they're not so important. This is what's important for you, right? It's the leading indicator. It's a leading indicator for economic health. Businesses react quickly. This is why it's important. It's a red folder. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. So it's a survey of about 300 purchasing managers, which asked respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventory. Okay, so this came in above forecast. All right, so you can see here, pivot talk killed by resilient U.S. services ISM read. Okay, ISM services remain strong in August. Okay, so hey, continue to follow the Fed narrative. We say, hey, you don't want to bet against the Fed, and so we right now expect them to continue to hike aggressively. So hopefully, okay, we see why this fundamental data is important. Now, we still have the big one coming up on Friday here in the United States and Canada is the employment change and unemployment rate, non-farm payroll employment change and unemployment rate for the United States, and also the average hourly earnings. Okay, very important coming up. First Friday of the month, every month. As we said last night, this thing moves in cycles. Okay, so it'll be interesting to see what happens with non-farm. As we saw, the ADP non-farm employment change came through above forecast. Any questions relating to the economic calendar? No? All right. Okay. For our newer folks, right? You see why the fundamentals are important? Yes, no? Hope so. All right. You don't have, like I said, we don't have to be an economic genius or anything, or a major in economics to understand that, hey, these things are important. Okay. And it doesn't take a whole lot of research, especially with all the technology and things now. YouTube, the greatest university in the world, to find out what all these things mean. Right. So we have to just make sure that we put in the work. All right. My father always told me, if you can read, you can learn. So if we can read, we can learn what all of this means. Nothing is above our head. Nothing. Okay. Hold on one second. Welcome to everybody who just joined us. Let me get you all set up. All right. There we go. Ryan, good evening. How are you?
I'm doing well, man. How are you?
Doing great, man. Doing great. Rocking and rolling.
Glad to be
It's
here.
October.
Yeah, man.
Yeah,
It's been
glad to
fun
have you
already.
here. That's it. That's it. I mean, I'm looking at a wild ride for this last quarter. So we will see going forward. But we know one thing based on this data is that the Fed is going to continue on its monetary path, try to get inflation under control. So that's that there. We see U.S. services growth beats estimates, ISM. So that's kind of like the front page of the day. And we can see Australia posts the smallest trade surplus in 6 months. So with that being a commodity currency, that could be signs that the demand for their exports are starting to slow down a bit. Okay, so we'll continue to keep an eye on that. So we know if you got a strong surplus, especially for commodity currencies, and you're a net exporter, then hey, we know that that can strengthen the demand for your currency. So when we see that Australia posts the smallest trade surplus in 6 months, it lets us know that hey, in the future, near future, right, we could just continue to see that Aussie move to the downside. So will it have its moments? Absolutely. But on a lot of these Aussie pairs, we are still projecting for the Australian dollar to weaken to the downside. Okay. And then, of course, ADP, if you want to read more in detail about that, US companies add more jobs than expected, which we were just talking about. Month over month in August, exports rose 2.6%, but it's not rising at the fast pace that it was. So it's starting to slow. So that's why it's the smallest trade plus in 6 months. Okay, so a lot of things is dealing with the rate. So yes, are things growing, but are they still growing at the same rate? Right? Are things starting to slow down? Okay, so that's one of the things that we have to watch out for, just like how the Federal Reserve, they raised rates at a very fast pace. It wasn't as gradual as a lot of people think that it could have been. And now you see the situation that we're in now. And now you're seeing all of these other central banks racing to raise rates. So now, by way of the United States Fed, they can't be as slow, right, and gradual in regards to raising rates. They have to do it now. Okay, so that's what we're seeing across the board. The US dollar came into this support. All right, we got the little bounce today because of what was going on with the ISM numbers, right? It all comes together. So we were asking last night, is it going to hold at this support level? And right now that it is bouncing around. We know that the dollar has a tendency to range for a bit, and then it can explode either way. So we open the A's in session, and we see it's moving to the downside. So just range bound right now, which could really lead to some interesting markets and setups for us. So with that being said, let's hit the charts. Hey, I'm not just going to run my mouth tonight and look at what I've got my eyes on. I want to give you all the opportunity to drop in the chat. Take a minute to post in the chat any pairs that you would like me to look at, and we will start out with that this evening. Okay, EJ, Aussie dollar. Okay. Okay, NZD Swiss. GU. All right. All right. So Kim came through first. Let's take a look at this EJ. see what's going on with it. All right. So let's look at it. That's on the 15. Right. Now we had this evening star, which, hey, is really testing that. Right. That may fail, or maybe it's just in the range, right? Maybe just holding the range. So we're back up. We came back in and pretty much tapped at 144. Okay. So if you look at it from the higher time frames, we're really just moving in the same area, right? Until we either get a break of this level or a move back down. Okay. So we come and take a look, right? We're just ranging. So if we come in and take this off, and we just key and look at the price action, we're holding right in this zone. Okay. So right around here, we're coming right back into that zone. All right. So this is just being patient. Okay. So we've moved up off the lows quite a ways. Okay. Now we're coming right back to this one. What is this? 144.26 level. And it's a matter, we'll see. Okay. We're into the Asian session now. Are we going to form a swing high? Here's my high candle here. We need two to the right. So it's continuously testing this level. And so we will see as the cast is back in the sell zone. Okay, so we move our way down. We can see where we are. Now, what's cool is we've got this daily support level, okay, that we have in. So now this becomes decent for us. So here is past resistance becoming future support. We're respecting that. Okay, so we're just going to look at the price action on this since it seems to be ranging, right? Now, we've made higher highs and higher lows right into this zone. Now what we need to do, we need to see which way price wants to break, okay? So now how I'm playing this, we got some misalignment, right? We got a 4-hour stochastic that's in the buy zone still, and we're ranging, okay? So we don't have a strong amount of pressure in either direction right now, okay? Whether from the buyers or the sellers. So somebody's got to win this out. Okay, just looking at this 4-hour, we're just looking at this with just support and resistance. So I'm looking at, hey, I've got to get a break above this 144.26 and preferably above this 145.23, right? A break of that zone to continue long, okay? To continue long. Or, okay, we hold this level and I'm looking at a breakdown, right? And a retest and back down. That's how I'm looking at that pair. Okay. As you can see here, it's just sideways price action. Okay. We can put the fibs, we know where we are in regards to a Fibonacci sequence, but when it's ranging, it's ranging. If it's moving just from left to right across the middle of my screen, it's range bound right now. We need price to break out and continue to trim. And right now it's kind of just sitting here. All right. So that's where we are. If you came down to the 1, same thing, right? 80-20 play back down, but you see how it tapped off this 236 and it's sitting there. So that's beautiful here, right? On the 1, beautiful play. That's the zone. But now we're correcting back up. So this is either going to come back up and retest or it's going to turn over, okay? And it's going to break and do exactly what we said it's going to do at that point, all right? Which if we break this level, is going to come right into that 382 at the 1. All right. So another way you could play this from this 1-hour chart is like this. Okay. Drop your fib. Let me see something. No, I don't want that. Here. Like so. Like this. Okay. That's a pretty sizable pullback. It's a nice reaction there, right? Almost 100 pips. So it's in your zone. So if you're playing this off the 1, Ken, what chart you playing this on? 1 hour, 15, 4. I'll just draw it off of here. Okay. So what I would do is draw my trend line. Okay. Off this pullback. Okay. See if we get a break and a move down. Okay. If you want to play it prior to it getting back to that support. Now I'm looking at this 1 hour look off this 80-20. So slight adjustment on that. Okay.
I'm sorry, Benny, I couldn't get to my mute button. I'm actually not, I'm just kind of learning. I'm not actually playing anything. I was just interested in seeing.
Gotcha. Gotcha. There we go. So that's where that's sitting now. Okay. Pretty good reaction on the pullback there. So I would just draw that trend line. Okay. So my concern is, right, from the higher time frame, what we saw is that how it's just ranging in this area. Okay. It's just ranging. But that would be the play, right? If you're using the cloud, like you can see here on this 15, you see how it's breaking back above it. See how it's pushed down, and then that's just because you're getting a very deep correction there. So we're back above the cloud. So if you're playing this off the 15 or the 5 or whatnot, right? So technically we have a trend line here, right? But what you also can do is just let it go, right? If you're on the 15 with the cloud, and if you get that break back below the cloud and your cloud confirmations line up and you get the break back below the cloud, then you get short, right? Kind of falls in line with what we're talking about. But I do want to bring that the daily level down. And here's that 382 target, like that. Okay. So that's what we're looking at. All right. So if you're watching the 5, all right, there we go. We're just zooming in. See how it's pushing up? Like so. All right. Your 1. All right. You see how your 1 has been long, right? Smaller time frame. Okay. So there we go.
Okay, yeah.
JC, what's up?
Hey, Benny, how's it going?
You're going pretty good.
Good. When we're working with the cloud, is it the same technique with the fib? Like if I have a 4-hour target, I could enter on the 15. Is it the same idea of like working with the cloud? If I have a 1-hour target, I can enter on the 15?
You got it.
Yeah. Okay. Thanks.
You got it. You're welcome. Because it's a fractal, right? Each chart is a fractal of the other. So you can, if you need that visual, right? Like here's this 1 hour fib here, right? You can see it's pushing pretty strong. It's pushing very strong. That's why saying that higher time frame, I'm thinking like, okay, this might just be range bound. Might get range bound on us to retest that level again. But maybe not, right? So you can drop it down to the 15. You see it, and that's your look or whatnot.
Okay.
Okay. Or wherever I had that at. Let me redo that. That wasn't accurate. There we go. So that was kind of more accurate like that. So that was right. See? Now you're just gonna let it ride, right, until it turns over, and then you would play it once it broke the cloud. Right. So you got your trend line that you're gonna run. Okay. That would be red to the upside. Okay. You get more aggressive if you wanted to.
So the trend line is more aggressive than the cloud, correct?
Yes.
Okay.
Yep. Because you remember your clouds are averages, right? Right.
Okay.
They're outside of your cloud. So your trend line is never going to be lagging. Your trend line is in real time. The cloud it is an excellent confirmation. So you're not going to get that super crazy, ridiculous entry at times, but it'll help you with the bulk of the move.
Okay.
So it's a bit more conservative. But how we do aggressive in the trend lines and things like that, you could do that with the cloud with time frames, right? So if you look at like your 5, okay, you see how that's pushing, you see the cloud relationship, right? So your cloud on the 5 is going to break before your cloud on the 15. You know what I mean? And your 1 minute, see how tight that's already riding to price. So you're gonna get
faster.
you're gonna get that break. So if you're scalping your lower time frames, a lot of times when people will say, well, it's so fast and crazy on these other time frames, but once you understand that the market moves in waves and you see a time frame enough, it becomes slow motion. It all becomes slow motion, right? It all becomes slow motion. So like right here on your 1, right? If you got to push down and it broke, and you took it at the close and put your stop up above the high, the cloud or whatnot, or above the high, the swing high, however you want to do it. If it's going to break, it's going to move, right? Now, I might not be ready to make that final move. Like if I'm sitting up here looking at a 1-hour chart and like this complete move for it may, if it breaks and it makes the move down to the 382 for 135 pips on your 1 minute or your 5, it may not be completely ready to make that entire move, but it's a wave happening, right? So it's a push down in that cycle. And sometimes if you play that, that's all you need, right? So, for folks that are in it, they like 10, 15 pips, things like that. Sometimes this is all you need, because what you first have to do is get that direction right. And so if we're looking at this correcting and we're thinking, our idea is for it to correct to the downside. Well, if it breaks, we got the direction right. Now it's just a matter of, what we're looking to gain at that point. Okay. So that's why we start out teaching people all the way from the top, all the way down, understanding the larger waves. So it becomes so much easier and to understand, and doesn't seem as erratic when you work your way down to the lower time frames. Once you get the spatial intelligence for it, because you can see it's all the same price action, right? We're just looking at a zoomed in view. Okay, and we know that 1 minute candle is going to form before that 5, the 5 before the 15, and 15 before the 1, and so on and so forth. So you're just doing it at a micro level, but 10, 15, 20 pips is 10, 15, 20 pips. So it just depends on the style of trader that you are. Like we were talking about, I don't even know if I can find it at this point because it's moved along so much, but it was a pound in ZD this morning that I was up, and that's moving, by the way. So whoever's in that 80-20, that's been a monster, and it's not even close to that target, but just down to that weekly support. This is pretty much 300 pips, depending on where you took your position on that. So being able to consistently identify U-turn zones is key. It's key. All right. So if you come down, you can see, right? Look at this break off the 5. You see that? That initial break there. So that break, you might be done off your initial break. That break was 200, almost 250 pips. Right? You might not even need that much depending on your trade plan. And like if I've got a goal, right? We challenge people 100 pips a week. Well, you're probably good on that. Okay. So what we teach you can apply to all different styles of trading, all different time frames. Like we said, the key is being able to consistently find out the potential U-turn point, high probability U-turn point, should I say. Okay. So that's that. Any other questions on how we go about doing that? Yeah. No, okay. Kim, I see the US 30. I might be able to pull it up today. I may not, depending on if we have time. If not, we'll get to it tomorrow on that US 30. And let's take a look at the Aussie dollar. So that's where we are on the 4. We know, right? We're bearish. Okay. We broke 66. So look what's trying to happen, everybody. Okay. When you see the big picture, right? You're not caught up in the weeds. Zoom out first, see the big picture, then zoom in. So you can see, look, we got that break at that 66. We push bearish, but it doesn't just fall forever, right? At some point, it likes to correct and retest areas that it broke. So right now we've got a pullback. Not sure if it'll get all the way back to 66, right? That's going to be dependent on the dollar and what it does at that support level. But we've got a little bit of corrective action going on right now. Okay, so if we look at the daily, okay, same move down. Okay, so we've got it drawn up, hey, potential correction, and then a continuation down. So medium to long term, we are bearish on this pair. Now, if you're trading with the trend to the downside, then you're waiting for a sizable correction, a pullback, and an opportunity to get short. If you're counter trend trading, then you're down on these time frames and you're looking for 80-20 zones, right? B to C's or your 80-20 zones for this price. Now, this is just moving sideways, but it's crazy with the way you saw the dollar gain strength. And you know the Aussie, hey, prediction to the downside, we got that dovish rate hike, but it's still holding there. So it's just ranging. So we need a breakout. See how close it got to that extension, but didn't quite get there. So there's still a possibility that you could get that U-turn. Here's that 382 on the 4. If you're using your 4-hour chart there's your 61.8. So if I'm a bear, I want to see this correct. Because fundamentally, medium to long term, we're bearish on the Aussie, especially the Aussie dollar with a hawkish Fed, and then we just got a dovish rate hike, right, from the RBNZ. So we would love if we can get this correction. If I'm buying this, right, to at least the 382, that's a beautiful thing. And even if I'm looking to get short, we want to see it push high, right? If I own something and I want to sell it, I want to sell it at the highest price possible. I don't want to sell my stuff at a discount. I don't have to. Okay, so we want to see that move higher. You can see here how it's taking this out. Look at that, because of that push, right? So this one I'm just focusing on the 4 primarily to see if we can get a deeper correction, okay, on that. So I'm kind of sitting still, trying to wait. Hey, if I'm short, and if you're already short, then you're looking for an opportunity on the correction to add to your position as it moves. Here's that daily 1.18. So still, right, down retracement zone, down retracement zone. If your trade plan doesn't call for you to sell in the zone and it calls for you to sell around your 61.8, 786 area, then you're not there yet. Okay, so that's the Aussie dollar. Any questions on that?
No, sir.
No. All right. So that's the EJAU. Joy. New Zealand dollar Swiss franc. We'll take a look at that. Whew. It's pushing. Okay. It's pushing. All right. So this is that B to C move. That's a nice bullish candle. You can see it pull back to test it. Not quite, probably almost 50%. And now look, so you can see it, right? Once you train your eyes, A, B, possibly C, and then the D, there's that 382. We're in the buy zone still with the stochastic. So the daily looks good for the correction. All right. Here's our 4. If we zoom them out, right? Charts are already set up. Charts are already set up. Doesn't want to make the play, right? So there we go there. So we're still in the middle of that move. Stochastic in the buy zone and then the 1. Okay. So here, right? 1 hour stochastic moves faster. We're already back. into the sell zone. So maybe, right, it's time, potentially, at some point, for the momentum to shift, and then we get another pullback and a continuation. Okay. But it's now tested that trend line twice. And it's held. So we'll see if we can get that continuation to that D extension, which is that 4-hour 382, which is still 120 pips away. Okay. So we ride the fibs until it fails, okay, until it takes out that A. Questions? That's your 15-minute there. All right.
Wait a minute, I do got a question.
Mm-hmm.
Can you put it back on the 4 and drop the fib on it with the cloud?
Sure.
So my question is for here, I agree with you. Everything to me look like it's on a reversal back up.
Mhm.
Would this, if the next candle form up underneath here and form a reversal right here, even though we got the green right here, would that be considered the pullback?
What if you got like a bearish candle?
Uh-huh.
Yeah, that form, yeah, you would see it. You would see it pull back. So you would see multiple candles on your 15, especially. You would see it correct. You would see it correct. So if it opened new 4 at this candle here, that open pushes bearish, testing the cloud, that would be like your pullback on your 1 hour and your 15. Because this leg is what you're seeing on the 1 and the 15 or the 5, right? That current price action is like you're just zooming in. But at the same time, we always remember, right? We're still within our AB boundary. You know,
okay,
still within our AB boundary, we've got a 50% pullback, right? So it could do whatever it wants as long as it's still within that AB boundary. We project it to move long. Is when it takes that A out, is when we're like, all right, right, continuation to the downside.
gotcha. Okay.
Yep. So right now, that's still hanging in here on your 4. Your lagging span hasn't gone through yet, right? But it's the lagging span that'll come with time. If you get further price action to the upside, that'll eventually push through. So if you come down to your 1, right, you probably already have it working its way through. All right. So you can see you've already got your lagging span that came through the cloud, and then it moves. So that's sideways, and see now you see it moving slowly but surely. All right, to the upside. Okay, so what this is telling me now, like this NZD switch, like you see how it's flat and it's really not trending.
Consolidating.
You know, yeah, it's just ranging, but you see that oftentimes in the Asian session, right? There's a lot less volatility oftentimes. So, you know, that part doesn't surprise me. Right?
What makes me stay out of this is because when I see, I guess I'm trying to distinguish between when it runs flat line and when it's an actual twist. And that's just my distortion because I had it at first. But because it's been so volatile, I've been seeing it a lot. And that's it. When I see it, because I played the 4 too, and it threw me off, and how much cloud that was there. Because I like it. What was that you showed GA earlier? When the cloud is right there and it breaks on through, do you know it's gonna keep going? But on here, it just looked like it'd be stagnant.
Yeah, it's just moving sideways. That's what it's doing. So you wouldn't surprise me through your Asian session if you get like a green and then a red and then a green, right? It's just giving you, it's right. We always say our best indicators are our own 2 eyes, right? So you already see that is moving sideways, but right, that is ranging within your AB boundary. We already see that the cloud is just confirming what we already see. You know, we already see what it's doing, right? So it's really like bullish to neutral right now. But we're above the cloud and we're still within the AB boundary, and we're holding above trend line. We've retested this trend line twice, and we've gotten a reaction twice. Right, so it's just a matter of, you know, does it want to push through, right? That's a good resistance level, good resistance zone here, which falls in line with your B boundary, which is always a strong level of resistance. So, you know, it's kind of what we expect. Kind of what we expect. So we just let it ride, see what happens. Let's see what happens. You know, I don't be surprised if it comes down and tries to retest the trend line again. You know, you got the bulls and bears fighting it out on this pair. You got a commodity versus a safe haven. So as the market bounces back and forth, it's possible to see that bounce back and forth as well. All righty.
Yes, sir. Thank you.
You're welcome. You're welcome. We had the GU. We looked at the Aussie dollar, right? Yeah. So let's take a look at this GU. Okay. This is our 4 hour. Right. So let me get this out of here. I was just gauging this. So there. Okay. So this is ultimately where we are, right? We know overall we've been bearish. Okay. Our weekly stochastic, that's long term, is in the buy zone, this flat. This daily that I've got drawn here. Is hovering. I'm gonna take this off so I can see this clearly. So we're getting a pullback on it, right? On the price action. So this is a low here. Support like this. Okay. There. Okay. Sure, we got the reversal and the pullback. Okay. Now, right, we've got a stochastic in the sell zone. Pound starting to settle down a little bit after all the craziness. So this is our high, right? So we need a second candle to the left, to the right to close. Once that closes, right, this could be a potential new high like that. Okay, see that there? Past support can become future resistance. And then we can see this potential to continue to turn right over, which plays into our narrative here. Okay. So we got a stochastic in the buy zone. We got a dollar sitting at key support. Okay. This may range a bit. It may range a bit, may push up a little bit higher, may range a bit, but we're still technically in a down retracement zone. Our A hasn't been taken out yet, and we're kind of just stagnant in this zone right here. So we've got this 4 hour at 112.11. If we get back below that and close below it, then we can see more downside pressure, right? But overall, I'm bearish until the dollar breaks support and gives us a good move to the downside, the DXY. I'm bearish long term anyway, pound dollar. But in the short term price action, that dollar holding and reacting at that support, right? I'm still going to hold it. Look to hold this bearish, right, on this 4 hour. So if we come to the 1, right, where we're saying, hey, yeah, we got a deep correction on a higher time frame. So yes, it takes out these waves to the downside. See how I broke trend line and took it out? You get a deep correction on your higher time frame charts. You're going to start taking out some fibs on the lower time frame. But this runs us right into the 80-20, which it did. So now, again, that 4 hour level comes into play. Okay, like so. That's your current, what? Hold on. That ain't right. That's your current price action right there and where we are. Okay. That's where we are. 80-20 zone, right? Came up to that 118 level, reversed out. We don't have a 382 on this one. So how we were talking about playing the volatile pound is we know that the larger move can happen on that 4, right? It's a long way to the D extension. But what we said we'll do is we'll play these shorter term targets like so. Boom. So bearish. And then if we get down into these levels where our A gets taken out, then we'll say, you know what, it's probably time for it to continue that push, that C to D push on the 4. Okay, that's what we were talking about with a lot of these pound pairs. Okay, so we're starting to get that crown type action, right? That we often see, right? That pullback action there. Okay, so we'll see if it's time for it to turn over and start to work its way back down. So that's where we are. If we go to the 15, yeah, we got a deeper correction. That makes sense, right? Now, see how it's pushing down? See how your lagging span is trying to come through price to get below the price action? See that there? We don't have that bearish cloud yet. We got a stochastic on the 5 in the buy zone. Okay, let's go up to the 15 and see what it looks like. See how it all comes together? That's your correction. You know that from the higher time frame. So let's see how it plays out. Okay, so this move here, see this move like this, doesn't look like much, but it's the pound, close to 50 pips. So if I come to something like my 1 minute, bang. Everybody see that? That's how the sequence works. That's how the price action works. Joey played a small position and a hit TP. Excellent. See? What you think, Ryan?
Man, beautiful thing.
Mm-hmm. I think we're getting to the point in the group where these lower time frames can be played consistently. You know, the challenge in the beginning is when you're learning. I know it was for me, it's just like, oh, because I didn't understand, you know, price action, fib sequence, fractals, right? I didn't understand that. So when I would get down to these lower time frames, it's completely lost, right? So I know we wanted to avoid that, you know, in this group in the beginning when a lot of with the content we were creating. But I hope you all can see now, like just the power of understanding, right? AB boundary, you know, am I in the up retracement zone, a down retracement zone, or am I in the up C to D push zone? Am I in the down C to D push zone? Like once you understand that concept, then it becomes really easy, right? At some point, doesn't happen right away, but once it clicks, it becomes easy to come down to your lower time frames and find those type of setups, right? But we just want everybody to be patient, learn the overall concept first from the top down. Then you can take advantage of that. So this little itty bitty move right here, see how when you go down, we're in the candle, right? And now you're trading within the candle here. Okay. See? Right? On top of that, see? Okay. Comes even more when you go from the top of that candle and the push down. Okay. That's where you get that overall move. But now look. Okay. So hey, this, now when I'm trading on you know, these aggressive charts like this, is bang, I get a break bearish, I'm in, right? I'm in. That's how we scout these lower charts, right? 1 minute charts like that, I get this break, I'm in, right? But you stop above the cloud or even up above the high, because look, your risk to reward, right? That's 17, it's a pound pair, so that's 25. Okay, so you're at a 1-to-1 there already. Okay, so however you want to play it, like that's 18, you put it above the cloud, 18, 15, between 15 and 18 pips. And now it's moving down. Okay, so gradually we evolve, right? And you can see here how on the 5 it hasn't even broken it yet. So what that tells you is that when it does break, it's got more downside potential. So you may see on your 1 minute, you may see it correct and then come back down. But for this particular setup here, that's over. That's done. Right? It's done. Everybody follow me on that? Kind of, sort of? Yes, no? Maybe, somewhat.
Yeah, kind of, sort of. Yeah, kind of, sort of.
Absolutely. I appreciate the honesty.
It's getting there. It's getting there, but I think because I haven't been practical and actually doing it, it just makes it a little bit. But I'm getting there. It's starting to evolve.
Absolutely.
Yeah.
Absolutely. I get it. I get it. So like we go back and we look at this pound New Zealand coming out of the zone, right? So if we come here today and we look at it, right? Once you find your U-turn point, your sweet spot, right? So like even here, okay? It's like even here, once you get up in the zone, you can go down to your lower time frame and hunt that down, right? At that level, right? If you're looking to scalp, get in and out of stuff, right? You can move down and find that. Hey, I'm in my zone. If you like to trade on those lower time frames, right? That's your thing. There it is right there. You see it?
Yes, I see that.
Is that cool? Is that cool or what? Right? You see that bearish candlestick right there? See? It's over 100 pips.
Wow.
Right? But as it ebbs and flows, it's going to break. But if I know that for my higher time frame, I'm in an 80-20 zone, right? I can continue to feed off of this, right? So I get my risk reward, whatever I want, and I'm out. But I know ultimately the major move is going to come, right? Because I know I'm in an 80-20 zone on my higher time frame. That's my U-turn spot. So if I come to the 1 minute, right, and you come back, you can see it. Right? It's a little bit crazy with the price action, right? But there you go, right? A little bit in and out, dancing around because it's a 1 minute chart, right? So it just depends on what your preference is and what you like to trade. If you trade the lower time frames, right? Some people only have time to swing, right? Swing trade, that's fine too, because we know ultimately, right? Regardless of this, we know the target. We know what the target is. We know that this can move. That's on the 4, right? But we know out of this 80-20 zone, we know the target is the 382. So if you're swinging, you're trading smaller because of your risk to reward and your stop loss and things like that. And we're taking our risk and dividing it by the stop loss. But the direction is the same nonetheless, down. It's just a matter of how you want to trade it as a trader. Now, we can't figure that out for you. That's what you have to figure out. And a lot of that has to do with your trade psychology. Some folks can run stops and risk a higher percentage and deal with the losses with no problem. But if you're the type of person that can't do that and you have high anxiety and it ruins your whole day when you get hit with a 3% loss or a 2% loss, then you probably shouldn't trade like that. You know, you probably shouldn't trade like that or you stick to it until you develop that type of tough skin that can deal with that, right? Losing to hit that one big trade that puts you in a profit and wipes out everything. Okay, so that Ebony, that's me. For sure. You know, you have to be honest with yourself. That's exactly what you're doing. So then you probably have to, you know, as enticing as it may seem for those, you know, those large lot sizes and those big short-term moves, if you can't handle it, you know, you either, like I say, have to develop the ability to do it, or you have to leave that alone and play the swing, because the destination is going to get you there, right? So even from this point, it's 257 pips. Now we know it's not just going to drop there. There's going to be times where the price action corrects. So if I understand that And again, that's why we start you from the top down, larger waves down to your smaller waves. Because if I understand this, then I know that on my lower charts, I should expect to see, right, price to move, because I'm on a 5-minute chart. The waves are smaller. So yes, this is moving down now beautifully. But when that pullback comes on a higher time frame, it's going to push this bullish, right? It's going to push that bullish. And then eventually it's going to push back bearish, back below the cloud. Okay. That's just developing your spatial intelligence. The only way you do that is to spend time on the chart. All right. So this can continue to feed you. All right. This can continue to feed you. It's bearish now, depending on the time frame that you play on. Do I want to play breaks back to the long side? Do I want to wait for it to push higher and then play the break back to the downside because I have a target? Okay, see here? Yeah. So that's my 382 target there. Okay. So I'll come down to the 5. There it is. Okay. So you may say, hey, I'll probably get this another good pullback. It could be a monster. It's a 5 minutes. So you can't let that price action scare you. Like, oh my goodness, that's a huge move. And then you pull a measurement stick out and it's like, oh, I'm on a 5. It's only 30 pips, right? So that time frames can play tricks on your mind like that psychologically, right? So if you get that, you may say, well, my target is here, so I'll let it do its thing and I'll keep an eye on it. But then if I get a break back below it, then I'll probably look to try to get short to that target. So that's how you can use the cloud on those lower time frames. Any questions on that? I think it's fascinating the way the price action works and how it repeats itself. Let's see. We had the GJ and pound cat. So we'll take a look at that. GJ, pound cat. Okay. So we're back up in this mess again on the GJ, which is what we talked about. So is this a matter of it wants to continue to push? We've made it. That's a ridiculous move, right? To the to the upside. Wrong tool. To the upside. 16, almost 1,700 pips. It's just
That's
crazy.
insane.
Yeah, man. That's unbelievable.
Was that in one day?
No, this is a daily. So that's 1, 2, 3,
Okay,
4,
gotcha.
5, 6, 7. It's still ridiculous. It's still ridiculous.
It is.
Yeah, it's only market manipulation can cause that, in which that's what they did, right? That's what they did, and there's nothing wrong with it. It's just understanding that is rare. It's rare. They had to get the market corrected. It's not that the pound shorted like it did. It's the rate in which it fell, which causes a shock. And you got retirement plans and pensions at stake. You know, so they had to come in and buy the long-term bonds like they did. They had to do that. You see how it's pushed back up into equilibrium now? Like, okay, it's pretty much back where it was. You know, it's the same thing that's going on with the yen and how the Bank of Japan and the government is watching it. They're saying, hey, we understand the free market, and we understand that the strength of the yen declines, but it's the rate in which it's declining that we have to fight against, because it's causing a shock to our markets, to our consumers, right? Who use the native currency. It's causing a shock to our business owners in regards to, you know, exports and the cost. So yeah, more people can come into Japan to buy the exports because they can get more bang for their buck on the yen. But there's a flip side to that. If I'm a business in Japan and the supplies that people want to buy from me, right? The items and the things that people want to buy from me, if the parts and the supplies that I need to make the item is more expensive, somehow somebody's going to absorb that cost, whether it's the consumer, right? If it becomes too expensive to produce the product that everybody wants to buy, that's why there has to be an equilibrium, right? It has to make sense, right? And for the pound, for the bottom to fall out the pound, we know why it happened. It was silly. what they did, just to announce a tax cut plan, right? Where it's not going to trickle down, and to do it without having an economic report to support it, right alongside of it, was silly. And the market reacted and let them know it was silly. So then they had to come in and buy the bonds to push the market back up. And that's why we're like this now. That's why the pound is in the situation that it's in. So overall, right, you're thinking bearish. Now this is against the yen. The yen is weak. It's a laggard in regards to monetary policy. There's a huge divergence between the monetary policy of the Japanese, the Bank of Japan, and other central banks. So it's just a matter of whether or not this wants to correct before continuing long. Okay. If you get the market gets scared and things continue to tighten, and the stock market continues to plummet, the yen is also a safe haven, right? It's also a safe haven. So you can see a correction in this still. Okay, so it's kind of out there. So you hear me talking sideways, and the market is moving sideways. That's just a lot of uncertainty, right? As we can see in the price action there. So we'll see, right? If we get a sell, like see how we're just ranging and holding at this level, but our stochastic has moved its way back into the 4-hour buy zone. Right. So how we found support here again at this level, right? So we may get that push back up here to hit that extension. Then we may see some major sell-off action. Not sure. Ryan, what do you think? What do you think on this pound yen? I would love to see it hit that extension target at this point. Just go ahead. Do what you got to do.
I do think it'll hit that level. Selfishly, I'd love for it to push down, but I think it definitely has a strong possibility of go ahead and pushing back up to hit that level. Still within that 80-20 scenario. So, yeah. Selfishly, I want to see it, but I think it's going to push up to hit that 167.
Yeah, it's trying to find some support, but you never know, right? If the market, we say U.S. futures up, edge up after downbeat session, we'll have to watch it tomorrow and see how the market opens. Yeah. See how the market opens, right? See how London opens.
Pattern there too.
I see it. Yeah.
Yeah.
See how London opens. But that right there, that pin bar, that's telling me maybe we move back up.
Real true.
So Benny, when you say that those moves are just ridiculous, who's in those moves? Is it the major banks, or is the free market that's causing that large amount of movement?
Yeah, your Bank of England stepped in to push that move back to the upside, buying those long-term bonds and things like that.
Bank of England. Okay.
Yeah, what caused that plummet? That's investors that sold it off after the decision to have a major tax cut, which they backed off. They backed off on that because of the way the market reacted. But it was the BOE that came through, to save the day on that one. Okay. They did what they had to do. Because you remember the conversation was, well, how are they going to solve the problem? Are they going to have an emergency rate hike before their next meeting? So people were talking about like that Monday, and it was like, no, that's not going to happen. And so the solution was to come in and to buy bonds. So that's what they did. So they bought the long-term asset. So that's where it's at. So we'll continue to see what happens with that. Hard to say. All right, Desi, have a good evening. Appreciate you being here as always. All right, so that's the GJ. GCAD, we'll take a look at that. This is one I scalped earlier today too, on a lower time frame. But hey, we're just hovering, right? That's the pound, right? And this may stay like this, right? This may stay like this, especially if we're not getting a reaction. Tomorrow's Thursday, so if you don't see anything come out of this tomorrow and it just continues to move sideways, then we have to look for a reaction come employment data on Friday with Canada. right? You need something to get it moving. But here's the thing, everybody. Oftentimes, when you get moves half the size of what we've seen with the pound, a quarter of the size of what we've seen, you often get periods of where there's equilibrium and the market's going to move sideways. Okay, until either the bulls or the bears take over and push market in a particular direction. So right now, when we're at this point, we need a catalyst. Okay, so we look fundamentally what's going on. Well, fundamentally, we have employment data coming out for Canada on Friday. Okay, see what the employment data looks like. See if it comes in at forecast, above or below forecast, and see if we can get a market reaction. If we don't see anything tomorrow, just by the natural flow of the market, we need something, right? Because we can see these are 4-hour candles, and look at what it's doing. Right, we've got equilibrium. Okay, so we need price to break out. Okay, and we know how to play it, right? If it breaks out and takes out this 4-hour level, that A boundary, look at where we are. See that? Look at how that's moving, like the volume is moving, right? It wasn't too long ago when we sat here and this was here, right? Now look at that. But it's not moving. Look at how crazy, right, that fight is between the bulls and the bears, right? Somebody's trying to win, because look how that pushed up already into your sell zone. But look at where the market's moved. Nowhere. All right? Look at that. Nowhere. So we need price to break out. So there's a pause. So we should pause on this pair. Question.
Hey, Benny, would you tell me the ATR, you'll read it, is it 384?
Yeah. On that daily, because it's been moving, right? So it's all types of crazy right now. Right? It's all types of crazy right now. Because of what's been going on. Right? So here, see this here, right? That's a 38.4 on this one right here, on this pound CAD. See it moving? You see how it changes here? See, look. See if you go up here to your daily, that 218.2. The other one we were looking at the other day was on that yen cross, right? Yen crosses. So here, see how that's moving, the ATR on that? Because look at it moving. You see that? How that's moving like that?
Yeah.
And you're on your 1 hour, right? See your 4. Okay, on your 4. All right, that's 20 days. All right, 20-day ATR, which during the month you have what? 20 trading days, right? So you see that the AT, so you see the 81.9 there on your 4, right? And you see something crazy up here, right? On your monthly. All right. So that's how you read that. Got it?
Yes. Is it different? I know it's different for each pair. As far as moving the decimal point over. What is it for the yen crosses? Is it like 3?
What are we looking at? That's on the price. So here, right now, right? That's a 25.6 on that. I was looking at that wrong yesterday on that.
Okay.
When we went over it.
Okay.
Yeah, that's my bad on that. I'm looking at that now on that yen and seeing it today based on what it was yesterday. Right? See that 58.6.
Yeah. Look, I
thought
my numbers was wrong. I was like, I know.
Nah, you're good. You're good. That was me. That was me yesterday. That was off. That was looking at that sideways.
Okay.
Yeah, you're good. You're welcome. Thanks for bringing that back up. So give us an opportunity to correct that. I appreciate it. All right. Yep. So that's that. We had. Oh, where's my chat? TJ, Pound Cat. That was it. Ryan, anything out there you're looking at?
Still got my eyes on that Euro GBP.
Oh,
Get that move back to the upside.
okay. Was it moving sideways right now? Yeah.
Yeah, pushed down a little bit, but yeah, sideways pretty much.
Yeah. It broke and pushed up. So we're right back at the 87.21 level. Okay. Okay. Let me look at this. Watching this. Yeah, it's Euro NZD. Let me something. Let me clear this out. I was thinking of a bullish push on that I wanted to play.
Yeah, on that we might get it, man.
Here's what I'm thinking. I want to try to play that on this 5. Like that. So I'm gonna keep an eye on that one and see if we can get a break back long on that Euro NZD. I've been watching that for quite a while today. And
yeah, that's it. Everything else, I'm just sitting there.
kind of just sitting waiting.
Yeah, I've been in from the Euro. Cat Swiss might be one to keep your eyes on as well.
Cat Swissy.
On the one you got a nice pullback on the 618 range on the one.
Okay. I'll look at that here in a second. Anybody still holding his Aussie NZD? I hope so.
Man, listen, I moved my stop. I was getting stopped out.
You did?
Yeah, bro.
That's all right. You made some money off
somewhat upset. Somewhat upset. Yeah.
Somebody else tell somebody in the group, anybody, nobody sitting on this. Who is this? It took so long.
Yeah,
They
I was
played
thinking,
around,
but I
man.
got out. Yeah, I had to get out.
I get Ebony on the 15 and the 5 and the and the 1. Ebony is out of there. Oh man, yeah, let's make it that held at that key monthly resistance at 114, 267. It reacted. So,
and to be honest with you, I don't know. I pulled my stop too tight.
yeah.
So, yeah, because I shouldn't have gotten stopped out of that. But I had my stop inside the high, which I'm not exactly sure why I did that.
I got you. It's all good.
I got stopped out right around that 114, 267.
Yeah.
On that wick to the upside is where I got stopped out.
Yeah, it was a pretty aggressive wick, especially for the Aussie NZD. But it's a slow mover again. Your ATR, right? Look at that. All right. Look at that. Right. So that can kind of help you, but it also can help you with your stop loss placement, the average true range. So, it makes sense to me for you to have moved that down. And then it just made that, that aggressive move, to the upside to wake it out. But it's still moving out. But hey, if that's going to continue to move down, here's a 382. That continues to be the path that it wants to travel. I mean, it's got a way. So there's going to be opportunity. There's going to be opportunity on that one. Have a good night, Mary. Have a good night. See you in the morning. Thanks for being here. All
Oh no, it
righty.
wasn't this pair. It was the Aussie cat that I had got out of.
Oh, the
So I
Aussie
think it's
cat.
Aussie. Mm-hmm.
Yeah, that's bouncing around. That move there. But we knew, hey, it could be rain. We said neutral to bearish, so that's gonna take some time. I'm still down to the downside on that. Friday's numbers for Canada will be interesting to see what happens with that. So this thing is just, man, that one today, I was like, well, we got to break back above 88.15. But hey, it is what it is. This is going to let it do what it do. Gives you another opportunity to get short at some point. And that's it. I haven't looked at what is Bitcoin doing. Let me see. It's trying. Oh, I need you to go ahead and break that level. Break that level. It's still pretty much range bound. We just gonna let that one play out. I need some more sell pressure, and preferably
Might
without
get another
another.
push to the upside first.
Think so?
Back to, yeah, potentially back to around maybe that 236 level. I don't think it goes higher than that though. Maybe
Yeah.
that B boundary 26,538.
Yeah. Yeah.
We might
Just
get a
wanted
bounce
to
in the stock market in the coming days.
maybe.
Continue to push up, yeah. But I
Jeremy,
don't see it breaking that $32,000 level.
you don't think so?
Nah, I don't think so. That rally
Oh,
in the
man.
stock market might get it there, but I don't think it breaks back above that before coming down.
Yeah. Yeah. It's a good point. We shall see. I needed to break that 17,773. That would make me happy.
Yep. Once we get that free fall, man, I'm licking my chops.
Yeah, you and me both. You and me both. Jeremy, what's going on, man? Question about the ATR?
Yeah.
Yeah. So if you know like the average true range of a pair, especially like if you're in swings and things like that, swing trades, it can help you to not, to keep your stop out of the way, your stop placement. So like if I know say on like a Euro GBP, even though that's picked up lately, so that's not a good example, but well, traditionally on the Euro GBP, say I've got to stop a ATR of like 40, right? So when you look at the average true range, right? So when we think about trading, if you got 20 trading days, they like to say, hey, you got 10 trades where price action is right on the average, right? But then you have 5 days where it's higher than the average, right? And then you have 5 days where it trends below the average for the ATR. So what that could do is that you could know, right? So if I've got a pound pair and that pound pair is moving at like the average ATR is say 98 pips, right? Then I might not be so aggressive in regards to moving my stop down. So if I'm in a move where I'll say like a pound dollar and the average ATR is 98 pips, and I'm in a move that's potentially say a 250, 300 pip target, I may not be so quick once my trade goes in a profit to adjust my stop, super tight, right? Beyond that 98 pips. So sometimes people will set a stop on a long swing at like 1.5 to ATR initially, and then they'll adjust it from there, right? Because you just don't want to squeeze it too tight on a pair that has a high ATR and you get your stop ran. So now you're out of a position and say I'm up 150 pips, I move it within that range, and then I get stopped out. Like, yeah, I get stopped out in some profit, but man, I might have left 200 pips on the table. You get what I mean on that? Does that make sense?
Yeah, it does.
Yeah. So knowing that average true range for your pairs can really help you, with stop, like kind of keep it out of the way. So like we see right here on your 4, like that 44.1 or whatnot on that Aussie dollar. So it can kind of help you to like okay, I'm in the swing. I'm gonna keep my stop outside that range, So that's how some people use the ATR for that.
So
Mhm.
a one. You know, the ATR on this pair is 441. Does that mean is 44.1 pips?
Yep. Yep.
Okay.
Yeah. That's the way that's set up.
Okay.
24 hours. You see how it's dragging? It's just dragging, right? And so that'll adjust. All right. See. And then when you go up to the daily, you see as you go to your higher time frame, how that changes,
Yes.
right? So and you know that makes sense, right? More data per candle, larger range. So that is tracking. Right. So that's how you can set that up depending on which chart you're trading on. Mm-hmm.
Okay.
Yeah.
So just a quick one.
Yeah.
Why isn't it rating as 99.9 instead of 999?
99.9. See that on that. Mm-hmm. All right. So 99 on that range.
Yeah. Cheers.
Got it?
Yes.
Okay. Yeah. So that can help you out, right? Or when you're swinging, you just say, hey, I'm gonna put my stop above the A, you know, whatnot. That usually keeps it out of the way, right? So different way of looking at things, right? You see how it changes as you go down through the time frames, right? So 15-minute, looking at your ATR, okay, how it builds. So Ebony said gold has some good scalp moves today. Let's take a look at that one. We'll look at gold before we close out. Look at that. Still correcting. It's beautiful. Formed a low on the 4. So we're testing that 1726 level. Right. So that's going to be interesting, right, as we move throughout the rest of the week, how it reacts to that level. We know gold can be explosive, right? People watch levels closely with gold, right? So if we break that level, you may have buyers come in and continue to push that price up into the zone. So, but we do have a new, so well, not quite.
Yeah.
Yeah, we do.
I was just watching it today from based off what we looked at last night and how it like just seeing those smaller today.
Mm-hmm. Yeah. So the question, right, just looking at the price action becomes, right, what happens at this level? You see it got rejected the last time, but it held up. So that's gonna be a nice test. Right. So is this gonna just become that higher low, right? And we push to a higher high, or is this gonna double top and push right back down? Be interesting to see.
I'm looking forward to just go head down.
You want to see you want to see it get short.
Yep.
All right. How you gonna play it?
So I think over here, because this morning when I saw the 80-20 on where it bottomed out at, well, formed that swing low at, and it made an 80-20 right there. And then I'm pointing to my screen, like you can see where I'm pointing at, but like where at that bottom, that was like an 80-20. So I bought there.
Okay.
And then now I'm like, maybe it'll come back down to go back to at least to that 23. I kind of get out before the 38 too.
Yeah. So just even with gold, right? We know how volatile it could be, right? So this could just be, right, your price action play, right? Just a good solid because it's within that range, like that. Right? So this could be your play here. like so. Look at this move up like that. Right. And say, hey, I want to see a test. Right. You really don't have a. It's moving. This is moving sideways, so I can't just run it up against there. But we may continue to move sideways. But we would love to see a retest of the 1726. Right. Maybe we get a high to form. So we'll push up like that. Okay. Yeah. Get it to hold, and then it'll move down. Right. This is just a good level to keep an eye on, because if it breaks it, then we look to see if we can get a retest and a continuation like that. Right. Like so. Bet you a lot of folks eyeing that zone, especially after the reaction that you called out. Right? You see how that double bottomed at that level?
Mm-hmm.
How it acted as resistance, then it became support. And it held. So let's keep an eye on it and see for our gold traders out there. Ryan, anything to add before we wrap things up tonight?
No, sir. Great session, bro.
Appreciate it. Appreciate all of you. I think that is it on the pairs that we had listed. UJ is going nowhere fast. You got that right. Yes, it is going nowhere fast. So yeah, that's that on the UJ. So with that, we'll wrap that up. That's funny. It is just pushing sideways consolidation. So look forward to seeing everybody tomorrow, 6:30 a.m. Eastern Standard Time with my man, Mr. Ryan Carthage. Till then, have a good night, everybody.
Good night. Great session. Good night, everybody.
Thank you. Good night.
Good night.